Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday the 30th of May, starting off with the FTSE 100, which looks as though it's in its second bull flag that we've had so far this month. Obviously, it's the end of the month now, but finishing the month in a bull flag based around 8,700, an end-of-day close above 8,800. We'll be heading rather quickly to the top of that green broadening triangle there from the end of March last year at 9,000, so looking for that to be hit, that level to be hit by this time next month. On the downside, hoping that if 8,700 fails, then 8,600 would be the lowest. But the 50 and 200 day lines both rising at the moment, so it's effectively a running golden cross situation. Moving on to the DAX, and here we've been looking for the top of the rising trend channel from the end of March last year. Now up to 24,700, and we're looking for that by the end of next month, giving this market a bit of extra time. That's certainly valid while we're above the March resistance, 23,500, but hoping that we'll actually stay on the right side of 24,000 as much as possible ahead of a potential move to 24,700. Moving along to the Dow, which has been the weak link in terms of the major indices. We're obviously somewhat sabotaged by the President of the United States. Here, still holding above the floor of that rising red trend channel there from May last year. While we're above that, we're obviously looking for the top of the channel, 47,400, but maybe more realistically, we are looking for this market to break recent, post-March resistance at 42,800. Hopefully in coming days, if we can do that, then maybe we have a chance of moving up to 44,000 by the end of next month. But this looks like a slow situation, which has been undermined by the tariff debacle. The other point to note, though, which is a very positive one, is the way that both the 50 and 200 day lines are rising, which suggests the next time they cross, there'll be a golden cross. So remember, the run up to a golden cross tends to be the strongest part of the cycle. We've also got the advantage of having at least two bounces for the RSI at neutral 50 over the course of May. Moving on to Bitcoin, and here, I suppose all the Bitcoin treasury companies are eyeing the price every few seconds, but here you see that we've disappointed ourselves with the move back below recent support at 106. The next level down really is the 101 area, which, or basically the 100,000 area, which was the initial May support. And below that, we're looking at the 50-day line, 97,700, potentially as support, especially given the way that that was the initial May resistance. So basically below 101, the risk of 97, but hopefully not lower than that, given that we are in the aftermath of a golden cross earlier this month between the 50 and 200-day averages. RSI still above neutral 50 at 54, which is a help, and hopefully suggests that we'll either bounce later today or tomorrow for this market. Moving on to gold, which was not in a great place yesterday, but it's actually turned out to be in a much better place as far as where we are now. Like the situation back in April, we've so far bounced above a rising 50-day line, which tends to be a very strong signal. The last time we did that in April, we went to new highs, so hoping that this time, if we can avoid the 50-day line, we'll break that 3350 resistance line from April and head up towards 3800. Perhaps as soon as the end of next month. Remember, we were actually looking for this market to get to 3,800 by the end of this month, which I suppose it should have done, given that peak we had in April. But a nice RSI 50 rebound as well. Hopefully that is a decent leading indicator on the upside. Looking at pound dollar, and here it was all about $1.33, and now it's all about $1.34 in the sense that old April resistance, $1.34, seems to have come in as new support. As we said previously, we're looking for above $1.33. We've been looking for the low 140s. Hopefully that could happen sometime by the end of the summer, maybe the end of August, something like that. Current rate of progress, we're really lucky, I suppose it would happen by the end of July. Obviously the interest rate outlook, a key factor there. Moving on to the stocks, and a decent announcement today from Aptamer with the Unilever link, and here you can see that we've gapped higher, got rising 50 and 200-day moving averages. There's effectively a running golden cross, looking for 0.5 pence plus by the end of next month, while we remain above recent support around 0.34 on a mid-closed basis, ideally The worst is 0.3, which is the current area of the 50 and 200-day lines. You can see we've had a RSI 50 rebound back to them this month, and so the situation looks set fair. Staying in a slightly similar area, perhaps, Avacta, here you can see that we've finally broken a resistance line there, July resistance line there from last year at 39 pence. Above that, we've been looking for 45. We can perhaps upgrade that to the 200-day moving average now at 48. And as you can see from the chart in the recent past, it's either been the 200-day line until the beginning of this year, which was resistance, and then in the last few months with the market even weaker, the 50-day line has been the barrier. But it looks as though we're ready to go back towards the 200-day line, maybe even exceed it as we did on the previous occasions last year. So that would give us a target maybe as high as 50 pence with a following wind while we're above the 39 pence level and that resistance line there. Bear trap gap reversal was the formation which has worked there, or the setup which has worked there on that situation, as well as bullish divergence. Moving on to Coinsilium, where the company sneaked in another £2.5 million to spend on Bitcoin treasury. I think the cash call was at 6p, so the share's doing quite well. The same levels apply though, 5.5 pence and then up to 9 pence on a technical basis. Best case scenario up to 12, maybe by the end of next month, once the market digests the latest fundraise. Moving on to Sell AI, and here beautiful consolidation there at the previous target there around 0.59. Above that on an end of day close basis, as I tweeted out yesterday, I was so enthusiastic, looking for up to 1.4 pence by the end of next month. It seems a bit of a punchy call, but it's a pretty punchy chart at the moment with the 50 and 200-day lines rising and the start of the rally, an unfilled gap to the upside for that situation. Onto something which is perhaps slightly more sedate, but we've got Coral Products, which might be something for people who like a smooth ride rather than a volatile one. Here we've got a rising trend channel, top of the channel there, 16 pence. Looking for that perhaps as soon as the end of next month, while we remain above recent broken resistance at 8 pence. You can see the RSI has been above neutral 50 since the latter part of March, so that this is looking strong. It's bounced off neutral 50 a couple of times. On to Creo, which I get emails from the PR of the company almost every other day, it seems, but obviously always welcome to get that kind of input. Here you can see we've got a little bull flag. It's got mid-move consolidation. The initial target here was 10 points, well, 10 and 3/4 pence. But now we're looking with this latest move and the rising 50-day line, we're looking for 23 pence by the end of next month, or even sooner. In fact, this does look rather good indeed, especially given the bull flag above previous resistance around 13 pence. On to Inspiration Healthcare, which I don't think many people look at all, but here we have a chart which is interesting. The 50 and 200-day lines have crossed. Looking at the top of that rising trend channel base at 33 pence by the end of next month, while we remain above the 200-day moving average at 17.4 pence. Not in alphabetical order for some reason. Chesterfield Resources, here we've managed to break our target there at 0.78 pence for the second time, quite comprehensively. And now we're looking for a final near-term target as high as 1.1 pence, maybe a bit more, by the end of next month. 50 and 200-day lines rising beautifully. This looks like a mid-move consolidation breakout. And so 1.1 pence, hopefully the minimum the shares will deliver. On to Ferro Alloy Resources, and here we got rising trend channel, a nice little bull flag there above old resistance at 8 pence, and looking for 15 pence by the end of next month. It's a punchy call, but it's a punchy looking chart as well, with the prospect of, well, we've already got 50 and 200-day lines both rising well, so that's effectively a golden cross, a running golden cross situation. Moving on to First Class Metals, which seems to be recovering well from all the malicious rumour mongering and insults that the company's been taking over late, bouncing very well, breaking resistance there around 1.5 pence. Looking for 2.8 pence finally by the end of next month. Obviously, we have had a few false dawns there, such as last July and then also back in February. But this one looks, with the gap close and the rising 50-day line near the base, looks as though this time we'll make it up to 2.8 pence for starters. Moving on to Kefi, where somebody said there was a golden cross in the making. I'm not quite sure whether that's the case. Doesn't really matter. Maybe if we look a bit more closely, we can see that there is a rather intimate relationship between the 50 and 200-day lines. But whatever the case is, support has come in at the moving averages level, so around 0.55. And above that, looking for the stock to at least head back towards the top of the range, 0.7 or 0.75. By the end of next month, but the key here is staying on the right side of the 50 and 200-day lines. The other thing that would help is that the RSI went back above neutral 50 versus 49 at the moment. On to Mkango, which certainly looks like a safe pair of hands at the moment. Another smooth-looking chart, rising trend channel there, heading for 26 pence, hopefully by the end of July. Nice ricochet off the 50-day line at 15.5 pence, and while we're above the 15 pence level, looking for 26 pence over the course of the first part of the summer. Moving along to Mast, which is flying at the moment as expected from a charting perspective. We broke resistance quite comprehensively at 0.3 pence. The initial target there, 0.34. Second target there, 0.58. And the third target, 0.92. Obviously, I'd like to report lots of messages of support and congratulations, but there've been none at all for some reason. But what is interesting here is that the shares gapped down back in November 23, and they've gapped up now, so it looks like an extended U-shaped reversal. There's also a gap down there in this time last year. So really, we're looking for a return to resistance on the way down, 1.6 pence by the end of next month. That is a punchy call, but so far the shares have actually exceeded expectations. Normally when you've got the purple line there, that is the most we were expecting the situation to go to. But at least while we're above that line, we've got the chance of a fresh leg to the upside. Probably at the moment you would be looking for the shares to hold at least 0.8 pence if there was any profit taking. Moving on, moving on to Pensana, and here you can see that shares responding well to the funding news that we've had for the company today. There's a resistance line projection there heading towards 50 pence, and we're looking at probably now by the end of next month, and especially looking for the shares to remain above recent support around 35 pence in the meantime, so about 35 to 50 on Pensana. Finishing off with a stock which seems to have divided the market. Obviously, there are those who've made out like bandits from the move, I believe, from 2p to over £1, and those are not involved or just don't like other people making money or throwing mud and other sort of stones, etc., etc. But what is interesting at the moment is we do have, we've had support come in as was expected towards 70 pence, and we got that rally towards £1 again. Hopefully, support will come in again towards 70 pence, but probably one has to allow down to the floor of that rising trend channel. If you're not in this situation, probably if there is a dip towards 60 pence and that uptrend line from earlier this month, that may be a potential entry point, especially after the gap down that we have had today. That's it for me today. More updates over the weekend.